Hello everyone, it's Wednesday, July 30. Today we're taking a closer look at the euro and British pound charts to evaluate potential market moves. The euro remained under pressure on Tuesday as a muted macroeconomic calendar in the euro area offered little support. Risk assets slipped to one-week lows, extending the bearish momentum that began late last week. Adding to the euro's weakness, US consumer confidence data came in stronger than expected. The index rose to 97.2 versus a forecast of 95.2. Meanwhile, the shortfall in US goods trade narrowed from 98 billion USD to 86 billion USD, further boosting the dollar and intensifying selling pressure on both the euro and the pound. Now let's take a look at today's macroeconomic calendar, which includes a series of key data releases. During the European session, attention will be on Germany's retail sales, expected to rise by 0.5% in June after a 1.6% drop in May. Also in focus will be Germany's GDP figures, with forecasts pointing to a contraction in the second quarter. A downside surprise would likely intensify selling pressure on the euro. In addition, traders will be watching Eurozone GDP data. The bloc's economy is projected to show zero growth in the second quarter of 2025 after a 0.6% gain in the first quarter. On an annual basis, GDP is expected to expand by just 1.2%, making a significant slowdown. If the numbers confirm weakening momentum amid trade tariff headwinds, the euro is likely to remain under pressure. Later in the day, market focus will shift to US data. The ADP National Employment Report is expected to show a gain of 77,000 private sector jobs in July, rebounding from a 33,000 decline in June. Meanwhile, US GDP is forecast to grow by 2.4% in the second quarter, following a 0.5% contraction in the first quarter, marking a sharp turnaround that could further support the dollar. The key event of the day, however, is the Federal Reserve's policy meeting. The central bank is widely expected to leave its benchmark rate unchanged at 4.5%. The Fed's continued wait-and-see approach could fuel additional demand for the greenback, even though President Donald Trump keeps criticizing the central bank's tight monetary policy. Fed officials remain cautious, warning that trade tariffs could trigger renewed inflationary pressures. Still, if oncoming data continues to impress, a rate cut may be on the table by mid-autumn. Until then, dollar strength is likely to persist. Turning to technical outlook, the 1-hour EUR USD chart suggests that a decline followed by a false breakout at 1.1522 could offer a solid buying opportunity, targeting a recovery toward 1.1571. A breakout and firm consolidation above these levels would open the way for further upside toward 1.1604, with the potential to extend gains to 1.1637. At this level, I would recommend considering short positions on the rebound. However, this bullish scenario would likely require a dovish tone from Fed Chair Jerome Powell regarding future rate hikes. Short positions at 1.1571 and 1604 should be considered on a false breakout, with the downside target set at 1522. If buying interest remains weak and the price holds below 1522, the euro could dip to 1491, probably extending weakness to 1456. At this level, going long on a rebound would be appropriate, aiming for a 25-30 pip correction. Long entries at 1492 and 1522 should only be considered following a false breakout. As for the British pound, it also remains under bearish pressure. A false breakout at 33.65 would generate a sell signal, potentially sending sterling down toward 33.36, which marks the middle of the current channel. If the price holds below this level, it would be reasonable to add to short positions, targeting a move toward 33.11 with a possible extension to 1.3266. At this level, going long on a rebound would be a smart play, aiming for an intraday correction of 25-30 pips. Long positions at 33.11 and 33.36 would make sense following a false breakout. Bulls, meanwhile, will be looking to reclaim the 33.65 level. A breakout and consolidation above it would open the path for a broader correction toward 33.92 and possibly as far as 34.92. At this mark, short positions on a rebound would be justified with a 25-30p pullback in focus. Short entries at 1.3365 and 33.92 would only be valid in case of a false breakout. Best of luck to all.